Today we're talking to Jack Gruber. I understand that you educate people about their options on dealing with capital gains tax. Tell us why you focus on capital gains tax and what is considered a capital gain.
All right, very good. Well, Marissa, I was in the investment business for over 35 years, and back in 2016, I retired. Unfortunately, it turns out that I'm one of those people that retirement is not a shoe that fits. So I came out of retirement, but rather than going back into the investment business, what I'd learned over the years was most people, when they're selling a capital gain or an asset and recognizing a capital gain tax, that they did not understand what their options were. They could talk to their accountant and their attorney, who would give them very limited information. And so I began to focus on specifically capital gains tax and the number, over a dozen options that people have when selling assets. Now, your second part of your question was, what is a capital gain asset? The dictionary or the IRS example is that a capital gain is profit that you receive or recognize when you sell a non-inventory asset. So what does that mean in plain English? If you've got a store and you're selling stocks or bread or whatever, the things you're selling are inventory. If you were to sell the store itself, or if you were to sell a piece of real estate, or if you had a capital gain from maybe an invention, such as intellectual property, all of these things would be classified as capital gain assets, and you would recognize or potentially recognize a tax from that when you sold it on the profits that you made. Complicated answer, but that's basically what it is.
Very important nugget of knowledge for folks to know.
Correct. And if you talk to most accountants, attorneys, they're very capable, very intelligent people, but it's a very confusing world. You have to remember there's 70,000 pages of tax code, of which capital gains is just only one piece of. And so I've taken on a challenge of focusing on that so that I could help accountants, attorneys, and those people selling the assets to understand what their options are. That's fundamentally what I do every day.
I see. So why does the government give us the option to defer our tax in the first place?
Great question. In fact, I do a lot of seminars, and I usually start off with that question. Can anybody tell me, why does the government allow you to defer in the first place? And the reason is one of, it's pragmatic. Best given as an example, let's imagine that you own a piece of real estate, a building that you've owned for many years, and you bought it. When you bought it, it was already 20, 30, 40 years old. So it's been around for a while. It could probably use some repair, some updates, be brought up to modern technology, etc. You as the owner look at it and say, it's giving me some income. I would like to sell it, but then you sit down with your accountant and you figure out how much tax that you are going to pay, which in the U.S. is going to be on capital gains somewhere between 25 and 40%, depending on the state you live in.
Wow.
And you suddenly say, wait a minute, this is more trouble than it's worth. I'm just going to hang on to this thing and take the income I've got, and so be it. Well, the government realized that what happens if the building gets sold? Well, it gets updated. It gets in line with current consumer desires and needs, and the tax base basically expands. Also, it may add more jobs for more taxes. So it's a pragmatic reason they've done it, that they allow the seller who was before resistant to selling now has a way to sell. The government will ultimately get their tax, and the economy will expand. So that's the kind of the fundamental reason behind it. And they've been doing this for over 100 years. This isn't something new.
Wow.
This goes back over 100 years.
A lot of people don't know about it though, right? Or what it is. I mean, we hear real estate tax, excise tax, but not a lot of people talk about capital gains tax.
Correct. And in your world, in the world of real estate, you have one of the more better known deferral options, and that's the 1031 exchange. That's simply a way of deferring your capital gain, and you do it through exchanges. But there are 9, 10, 12 other options that you also have. So
quite a bit of options then.
Yes, a lot of options. They fall into two basic categories. The categories are exchange options and installment options. Under the exchange options, you have what I mentioned, the 1031. That was done in 1921. You have 1033, which is eminent domain. You have what's called a DST, or a Delaware Statutory Trust. All of those options under the exchange, money does not change hands. You defer by swapping one property for another property. And you can do that for a number of times. There's no limit on the number of times. The other set of options that you have are what we call installment sale options. That's 453. That's the oldest option ever done by the IRS. That was done in 1913. Then you have 453A, which was done 40 years ago in 1980. And then the most recent one, you have an option that was done just 3 years ago, and that is the Economic Opportunity Zones, or OZ options. All of these, and there are several in between the ones I've listed, but those are all options for deferring your capital gains.
Interesting.
Okay? So,
now, can you give us, you gave us quite a bit of ideas of what some of the deferral options are, but how might an asset seller benefit from them, or what is the best option?
Well, I get asked that a lot. What's the best option? Which one should I do? It's not a question of best option. Each of the options have value. They have good points, bad points. It all is dependent on what is your situation, what are you selling, and to accomplish the goal you're trying to reach, which option gives you the greatest opportunity of getting there. So as an example, if you're selling real estate, if you've got a building and you've depreciated it and you'd like to get another building and then depreciate it, often the best approach is the 1031 exchange. Let's imagine, though, that you've had buildings, you've done 1031 exchanges, you want to retire, and you don't want another building. What are you going to do? Well, now you've got this big capital gain. Well, you might then begin to look at something like a DST, which is, I refer to it as a mutual fund of doing 1031 exchanges. Or you could switch to the other side of the stream and look at something like a 453A, which allows you to sell your asset, receive your money at the time of closing, and defer your capital gains for up to 30 years. That can be very financially beneficial.
Wow. Or the life of the mortgage, pretty much.
Yeah. Or longer, yes. But 30 years is normally a pretty good deferral stream. And think about it. During that 30 years, you now have the dollars that you would have otherwise given to Uncle Sam, you're investing. And then at the end of that, you pay your capital gains and you get to reap the benefit of any excess profit you made on that money. So it can be financially very rewarding. But again, it's not a question of right or wrong. That I specialize, everybody that's in the business of capital gains specializes in one of them because they're just complicated enough. I specialize in 453A. However, when I look at, let's say I look at a dozen different opportunities of people selling assets, I can tell you going in, no more than about 30% at most are going to actually, a 453A will work for. In some cases, they won't qualify. The money's not right. What they're trying to accomplish doesn't fit the need. So when that's the case, rather than my simply saying to them, well, I'm sorry, I can't help you, you have to go somewhere else, I will take them through the process of all of the various options. And if one of those appears to fit, send them to someone who specializes in that area. So that's really what I've tried to do is to be a resource as much as anything to help people with the capital gains issues.
That's a great thing to do because people need information, and if you're just saying, oh, well, go Google it, then obviously everybody gets wrong information on Google. It's not expertise.
It's true. In fact, you can go on to .gov and pull up one of these options and read about it. I do that quite a bit. It will drive most people slightly crazy, though, when you start reading government structure and statute, it gets complicated very quickly. And so I spend a lot of time working with accountants and tax attorneys, teaching them about some of the options they are less familiar with.
Interesting.
Yeah, it is. It's a peculiar world. I have friends who know that I spend a lot of time reading Irish code that say that basically I'm a very sick person to want to do that in the first place.
Sounds like great bedtime reading to me.
Yeah, it's not like a good Robert Ludlum novel, I promise you.
Maybe it's sort of a mystery novel type.
Well, it's a mystery. Half the time, it's a mystery. What in the world
And even when you get to the end of the book, you're still wondering what happened or what's going to happen.
That's right.
Well, that leads to my next question. Does the IRS or Congress ever make changes to the rules surrounding the deferral options, and what happens when they make a change?
Well, it's the government. So yes, they make changes all the time. They're always reviewing, and it's interesting what takes place. Probably the best example of what takes place when they evaluate the rules took place just 3 years ago. If you remember, in 2017, we had the Tax and Jobs Act, the reduction tax, income tax, etc. They went through all of the options, and they made two very major changes. One was in the 1031 exchange. In the 1031 exchange, most people didn't realize, but before 2017, you could put virtually any asset you could trade in a 1031 exchange. Art collection, collectibles, cars, jewelry, whatever you wanted. You could do, if you could figure out the mechanics, you could do a 1031 exchange. Well, in 2017, they changed that, and today in 1031 exchanges, you can only do real estate, which is what most people thought it was in the first place. But that was a very major change. We're talking about billions of dollars that had been put into a 1031 exchanges in things like art. I know a group that has been doing this for years, and a multi-million-dollar art collection. Well, now what does the government do? Well, they put in the rules and simply said, well, going forward, you can only do real estate. Now, did they go back and tell those people that have been doing this, oh, you've done something bad, and therefore you have to pay the taxes? No, because those people had followed the rules. They, as the law existed at the time, they followed them. So they simply said, all right, as of January 1, 2017, going forward, you can only do 1031 exchanges with real estate. And they simply grandfathered the rest of them in. That's a normal course of action for the government when they change the rules, assuming you followed the rules as the law prescribed. The other change was the addition of a new option, and that was the economic opportunity zone, or sometimes referred to as the Oz options. And each governor in every state received so much latitude in terms of designating certain zip codes that were needing economic advancement, and you can invest in those and you get a deferral. That runs out in 2026, I believe it is, and we believe that's going to probably be extended going forward, but that's still an open question. But that's an example. So to answer your question, yes, they can change it, and they do change it from time to time. Mm-hmm. And usually, assuming you follow the rules, they grandfathered in, so you fall under whatever the new rules are that they've established.
Do you think these changes were good for the economy, or good for buyers and sellers in general?
Yeah, they were. I mean, and there are those who had, say, an art collection or some kind of expensive collectible that wanted to do a 1031 exchange. They're not probably very excited about it, but it clarified the rules. And most people, to be quite honest with you, most people thought that a 1031 exchange was for real estate anyway. So it sort of clarified there. Mm-hmm. The Oz option is great. You're taking economic areas that could use some improvement, giving some tax advantage to invest in those. You've got to be smart here, because it's one thing to write off your taxes. It's another thing to write off your whole investment because you made a bad decision up front. So you have to be careful with these options. You have to understand the benefit and the downside of each one of them and how it affects you. But for the most part, the options are good. They help the economy. They move it forward.
Mm-hmm. Which we love. We all want a stimulus check.
Right now, we all want to just escape our houses.
That too. Get out of this quarantine.
That's right. That's what I'm saying.
So that leads me to my final questions. Are there any final comments to the sellers who are on the fence about selling, or who may have additional questions? We know there's a lot of fear in society with going out, and then other people are obviously extremely angry and want to get back to work. So I feel like there's this dichotomy of emotions that's happening right now.
There is. I guess the thing from my perspective of what I do that I would stress to people, simply understand that there are options. There are more options out there than probably you realized, and there are more options than your accountant or your attorney is telling you about. Not because they're bad people, simply because they're not aware of them. So understand that you have options. If you have questions, I spend a lot of time on the phone simply answering questions for people who are thinking about selling something, piece of real estate, and they want to know what are their options, how can they do it, who should they talk to, etc. So know that you have options. That would be my number one thing. Number two, if you have questions, you want to learn a little more, pick up the phone and call me or send me an email. I'm happy to respond or try to help you in any way I can. And if it fits that it's a 453A, I'll even get involved in it. But beyond that, I'll help you understand what's available to you.
Well, definitely sounds like something that needs to be decoded by experts and nothing that the average American knows about. So it's always good to surround ourselves by people who are familiar with, these tax codes that can save us money, especially sellers, and boost the economy.
Yes, it is good, and it's particularly good for the seller. I work with so many people my own age who are getting ready to retire and will do better at retirement than I did. But this is a great way for them to expand the amount of money that they have available to them in the retirement, is through the deferral of the capital gain. So,
So there's options, in short.
there are options. There's no question there are options, and you need to learn about those. So call me. I'm happy to help.
Wonderful. Thank you so much, Jack, for your time today. We really appreciate it. And for more information, give us a call. Our contact information will be here at this end of this video.
Thank you, Marissa, and thank you for the opportunity to talk to you this morning.
My pleasure. Have a great day.
Have a great day. All right, you too.
Thank you.
Bye-bye.